Okay, so you ever see a company just absolutely crush it? We're talking record-breaking results, only to watch its stock kind of meh or even drop? Well, that's the exact situation with SoFi Technologies right now. It's a real paradox, and we're going to unpack it together.
So, on one side, you've got this just fantastic earnings report. I mean, record revenue, record member growth. They even raised their guidance for the year. Everything's pointing up. But then the market? It basically shrugged and the stock dipped. It's the classic Wall Street head scratcher. Amazing news, but a less than amazing reaction.
So, this really makes you wonder, right? What in the world is the market seeing that we're not getting from the headlines? Are investors just being super cautious, or is there a real, legitimate concern hiding under all these amazing numbers?
All right, let's get into it. Here's our game plan to figure this all out. We'll start with the paradox itself, then look at their crazy acceleration. After that, we'll find the one black eye in their story, see why Wall Street can't agree, and finally, we'll peek at the road to 2026.
SoFi's situation right now is a total tale of two stories. On one hand, you've got a business that is just firing on all cylinders. I mean, absolutely smashing its own goals. But on the other hand, you've got a stock that just can't seem to get everyone on board. It's like the market isn't convinced the party's going to last. So let's start with what's not up for debate, the facts. Q2 of 2025 was, by any measure, a home run. They didn't just meet expectations, they blew past them, beat on earnings, beat on revenue, and then they basically told Wall Street, hey, get ready, because the rest of the year is going to be even better. And look, this isn't just about hitting a target for one quarter. SoFi is basically in hyperdrive. They set these really ambitious goals for 2026, and they're not just on track, they're flying past them already. Think of it this way. Imagine they planned a road trip to get to a specific city by the end of 2026. Well, it's only mid-2025, and they've already blown past that city and are well on their way to the next one. You've got analysts who were skeptical just a year ago, now scrambling to redraw their maps and figure out where SoFi is going next. And the momentum here is just wow. In just one quarter, they added a record 850,000 new members. To give you some perspective, that's like the entire city of San Francisco signing up for SoFi in just 3 months. This isn't just a little bit of growth. It is a tidal wave of new customers. So that tidal wave brings their total up to a massive 11.7 million members. That's a 34% jump in a single year. In a fintech space that is super, super competitive, that's how you know they're doing something right. And of course, all those new people are spending money, which is driving some spectacular revenue growth. We're talking more than 43% year over year. Let me just say, in this kind of tough economic climate where a lot of companies are just trying to stay afloat, that kind of growth is, well, it's pretty much unheard of. It's seriously impressive. So what's the secret sauce? What's driving all this? Well, a huge piece of the puzzle is something new they're doing called the Loan Platform Business, or LPB. And this was a brilliant move that kind of caught Wall Street off guard. Instead of just making loans and keeping them, SoFi is now packaging them up and selling them to other banks and institutions for a nice fee. It's high margin, low risk. It's just smart business. And you can see just how much this LPB has supercharged their financial services business right here. Their original target for this part of the company was a super ambitious 50% growth. What did they actually deliver in Q2 thanks to the LPB? An incredible 106% growth. I mean, they didn't just beat their goal, they more than doubled it. Okay, so everything sounds incredible, right? The story is perfect. Well, not quite. With all this amazing performance, there is one part of the business that's kind of holding the whole story back. This is the big but that the bears love to talk about.
And one analyst from Data-Driven Investing put it really bluntly, calling it the one black eye that SoFi has. And that's exactly what it is. It's the one thing that gives critics something to point to, and it's what makes even the biggest fans of the company a little nervous. We're talking about their technology platform, Galileo.
See, SoFi bought Galileo with this huge vision that it would become the AWS of fintech. The back-end plumbing for tons of other financial companies. They were promising steady, long-term growth of about 25% a year. But the reality? It's been a real letdown. This past quarter, it only grew by about 15%, which is way, way off the mark. So this is what's created such a huge divide on Wall Street. You have this incredible success on one side, but this big underperformance on the other.
It's created two distinct camps, one that's cheering the insane growth, and another that's pointing at the flaws and saying, yeah, but look at the price tag.
And this chart just says it all, doesn't it? Take a look at the analyst readings. There is absolutely no agreement here. You've got a few analysts saying buy, 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 but most of them are sitting on the fence with a hold rating. And you've even got a pretty big chunk saying sell. And when you look at their price targets, I mean, they are all over the place. You've got Mizuho saying the stock is going to $31, and you have Barclays on the other end saying it's only worth $12. That is a gigantic gap. It just shows you nobody can agree on what this company is actually worth. So what's the big hangup? It really comes down to one thing, a rich valuation. The argument from the skeptical side is that SoFi's stock price today isn't just based on what they've done. It's priced for perfection. It assumes years of flawless execution and nonstop growth. It's like they're walking a tightrope. Everything has to go perfectly because one little stumble could mean a big, big fall. So where do we go from here? Let's take these two competing stories, the incredible growth versus the high valuation, and figure out what it all means for the future. What should we be watching on the road to 2026?
Well, there are a few big things coming up that could really help SoFi earn that high price tag. First, there are new rules on federal student loans, which could send a lot more business their way. Second, it looks like they're about to jump back into crypto services now that the rules are a bit clearer. And third, they're getting deeper into using blockchain for things like cross-border payments, which could be huge.
So, you're going to want to circle a few dates on your calendar. The next big test is their Q3 earnings call on October 28th. Then we'll be looking out for that crypto relaunch at the end of 2025. And of course, every single earnings report is another checkpoint on that road to 2026, where we get to see if their reality matches up with their promises.
So in the end, it all comes down to this one simple question. SoFi has a growth engine that's running faster than anyone thought possible. But it's also got a stock price that's already in the fast lane, expecting perfection. So the big question for the next year is a simple race. Can SoFi's actual performance keep outrunning Wall Street's massive expectations? We're about to find out.